The U.S. stock market operates in a dynamic environment influenced by numerous factors, including economic policies, global events, and political leadership. During Donald Trump's first term, his economic policies, particularly his focus on tax cuts, deregulation, and trade tariffs, had a significant impact on stock market performance. With the possibility of Trump's second term, many investors are keenly watching for how his policy shifts might influence the stock market. This video explores the top 10 stock market trends that could emerge or continue during Trump's second term. 1. Continued focus on tax cuts and corporate tax rates. One of the most prominent features of Trump's first term was the corporate tax cuts implemented through the Tax Cuts and Jobs Act of 2017. If Trump secures a second term, it's likely that tax policy will continue to favor corporations, including potential further cuts to the corporate tax rate. Lower corporate taxes generally lead to higher corporate profits, which can drive stock prices upward, especially in sectors like technology, energy, and financial services. Investors in these sectors might see continued growth as companies retain more of their earnings. 2. Increased deregulation of industries. Deregulation was a cornerstone of Trump's economic agenda, with the administration rolling back numerous regulations in sectors such as banking, energy, and healthcare. If Trump returns for a second term, investors can expect further deregulation efforts, especially in industries that had been heavily regulated under previous administrations. While deregulation can lead to increased profits for businesses, particularly in the energy and financial sectors, it also raises potential risks for market stability, depending on how these policies impact competition and investor confidence. 3. Renewed trade tariffs and protectionist policies. Trump's trade policies, especially his imposition of tariffs on countries like China, significantly impacted global trade during his first term. These tariffs caused disruptions in global supply chains and had mixed effects on stock markets, benefiting some U.S. industries while harming others. If Trump's second term includes a continuation or expansion of trade tariffs, markets could experience heightened volatility, particularly in industries reliant on international trade, such as technology, automotive, and manufacturing. On the flip side, sectors that benefit from protectionist policies, such as U.S. steel and agriculture, may see stock price gains. 4. Increased focus on infrastructure spending. Trump has consistently discussed the need for significant infrastructure investment, particularly to revitalize roads, bridges, and other public works. If a second term sees an increase in federal infrastructure spending, this could have a direct impact on stocks in construction, materials, and related sectors. Companies that supply raw materials, e.g., steel, cement, and lumber, or are involved in construction projects may see a surge in demand, potentially driving stock prices higher in these industries. 5. Healthcare sector shifts. Healthcare policy under Trump's first term was largely focused on efforts to repeal the Affordable Care Act, Obamacare, with mixed results. In a second term, healthcare reform could remain a hot topic, potentially leading to further changes in regulations affecting health insurers, pharmaceutical companies, and hospitals. Stock market trends in the healthcare sector could fluctuate depending on whether the administration introduces reforms that benefit or disrupt companies within the sector. Investors may focus on companies that stand to benefit from deregulation and cost reductions. 6. Focus on energy and fossil fuels. Trump has been a staunch supporter of the fossil fuel industry, and his administration took steps to roll back environmental regulations that hindered the production of oil, natural gas, and coal. If this trend continues in a second term, investors can expect the energy sector, particularly oil and gas companies, to benefit. Stocks in companies related to drilling, exploration, and production of fossil fuels may see continued growth as the administration supports the U.S. energy independence agenda. 7. Stock buybacks and shareholder returns. Under Trump's first term, many U.S. companies used the tax cuts and deregulation policies to boost stock buybacks, which tend to drive up stock prices. Buybacks can help improve earnings per share, EPS, and are generally seen as favorable for investors. During the second term, it's likely that buybacks will continue to be a key feature of corporate strategies, particularly in large-cap stocks. This trend would be beneficial to short-term stock prices, as companies reward shareholders with higher stock prices. 8. Technological innovation and growth. The tech sector has been one of the primary drivers of the stock market's growth in recent years, and Trump's second term is unlikely to reverse this trend. While Trump has had a complicated relationship with China, especially with regard to trade tariffs and intellectual property issues, his administration has generally supported innovation and growth in the U.S. tech industry. In a second term, tech stocks could continue to thrive, particularly companies involved in cloud computing, artificial intelligence, AI, and other cutting-edge technologies, as the U.S. aims to maintain its competitive edge in global markets. 9. Stock market volatility and uncertainty. Trump's first term was marked by significant market volatility, often driven by his unpredictable actions and rhetoric on issues such as trade, foreign policy, and regulation. Investors may continue to face uncertainty and volatility during Trump's second term, especially with potential policy changes, unpredictable political events, and trade tensions. This volatility may provide both risks and opportunities for short-term traders, while long-term investors may need to focus on stable, defensive sectors to weather the ups and downs of the market. 10. Global market impact. While U.S. markets are often the focus during a presidential term, Trump's economic policies also affect global markets. His stance on international trade, tariffs, and economic nationalism has the potential to influence global stock market trends. Countries and companies that rely on exports to the U.S. or are involved in trade disputes with the U.S. could see their stock markets impacted by Trump's policies. Investors who hold international stocks or exchange-traded funds, ETFs, should monitor these global dynamics, as they could significantly affect their portfolios. Trump's second term promises to bring continued market volatility, with his economic policies potentially shaping the direction of the stock market for years to come. From tax cuts and deregulation to trade policies and infrastructure investment, there are several factors that will impact market trends. While some industries, such as energy, healthcare, and tech, may benefit from his policies, others may face challenges, particularly those exposed to international trade tensions or regulatory changes. By understanding these trends and being prepared for market fluctuations, investors can position themselves to navigate the uncertainties of Trump's second term while seizing potential opportunities in the stock market.